Welcome back to Perry Wellington Real Estate 4.5. Could today's mortgage borrowers be the canary in the coal mine for a coronavirus-fueled foreclosure crisis? Well, this guy says yes. He is Mark Calabria, the Federal Housing Finance Agency Director, and he said as much during an interview with CNBC this week. So guys, Calabria thinks the economic downturn that the pandemic has caused so far could lead a lot of people into foreclosure. Is he right? What do you think?
Well, foreclosure has everything to do with jobs. So if folks have jobs and they're working, you shouldn't expect that things will go into foreclosure, but it really has a lot to do with the job situation. So if you have two incomes and one family, one of the incomes loses their job, again, it puts people in a lot of danger when it comes to foreclosures.
Yeah, I thought there were some numbers that were interesting. I found just before the outbreak, the U.S. had the lowest number of foreclosures in over 10 years. So we were on a roll. Unfortunately, not so much right now. But Calabria says if the downturn lasts 6 months or more, we're going to head for foreclosure central. But if it's just 2 or 3 months, he thinks we can bounce back. Jordan, what do you think?
Yeah, and he, like what you were talking about, the canary in the coal mine.
Yeah.
People that have equity in their homes are obviously going to try to hold on and keep that equity and preserve from losing their home. But what he was saying is foreshadowing that is, people with government-based loans maybe that don't have a lot of equity that, bought them on an FHA or a VA loan. It's a little bit easier for somebody like that to walk away from the home than somebody that owns the home, 100%.
Yeah. Well, I know a lot of buyers seem a little bit more apprehensive these days. Mortgage applications dropped 14.2%. This is according to the Mortgage Banker Association. And they said that buyers are also scrambling, buyers who already have homes under contract are scrambling to get those deals closed before it gets worse. So, a sign of the times. What should buyers do now?
Well, one of the things that's most concerning, we had 2 deals in the last 2 days drop out because the mortgage requirements have gone up. So the credit score required that you need in order to obtain that loan is actually increasing right now. Mm-hmm. And it's likely that that'll increase even more. So the danger for any of you sellers out there, if you've got somebody on a loan that's got a 620 credit score and they're getting an FHA loan, it's very possible, like we've had in a couple of circumstances, where those loans will drop out. Those buyers will drop out because they don't qualify anymore.
That's right. And there is help on the way. They're talking about forbearances. A lot of people are getting word that they can put off their mortgage payment for like 2 or 3 months and they'll tack it on to the end. It's not happening for everyone, but it is out there. So best advice is to call your lender, right guys?
Exactly.
Yeah.
Yeah, you don't want to miss a mortgage payment without having something like that set up, because
Absolutely.
You could be looking at a foreclosure or something.
That's right. And if you're renting, pay your rent. Talk to your landlord if you have an issue, but make sure you still pay it, because you just never know. You don't want to be in a bad position later. All right, well, up after the break, the new normal virtual showings. We talked about this. We're going to take you on a tour of one of our listings next, but first check out this listing in State College from Paula DeBolt.